Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, everybody, good morning. Welcome back to the live stream. Got 100 people tuned in already. Happy Thursday to you. Hope you are doing well. On this show every day, basically what we do is we take a look at charts, markups, things that we're seeing in the markets. If you enjoy this stuff, remember to hit the thumbs up button, subscribe, and turn post notifications on so that when we go live, you don't miss it. So, first of all, let's take a look and see how things are shaping up here this morning. Got the S&P 500 down about 0.5%, NASDAQ down 0.5%, Dow Jones down about 0.4%. We got the Russell down about 1% today, coming back towards this 2,000 level. Going to watch that one close. We also have the DAX down a little bit today, the Nikkei, the Japanese stock market, the Chinese stock market's down a little bit, and the VIX is up about 5.5%. Dollar index is flat on the day. Japanese yen is softly higher here. And then gold is pretty much unchanged today. Silver, however, down 2%. Copper down 0.7%. And we've got oil making a pretty good move lower here this morning, 1.1% lower. But maybe the big showstopper this morning, guys, is Bitcoin. Take a look. Bitcoin hitting almost 112,000, 111,000 per Bitcoin. Kind of crazy to think about. We have just broken to fresh all-time trading highs, and you can see we are cleaning past through that previous high, right? Pretty decisively too. This is a daily chart. You had a nice daily close above the previous all-time high, and today we're taking a stab at another all-time high. Pretty impressive. Right? Pretty solid move higher here. And, you know, all of this to say, I actually did a chart markup on this in our Telegram channel, which you should join. It's free to join. This was the chart of the day here that I did a little markup on. Fresh all-time highs. Bitcoin has been incredibly impressive this year. And while stock markets dropped big, Bitcoin has actually been a relative winner in all of this, right? All of the scrutiny and uncertainty around U.S. and its trade negotiation stuff and the new administration and all this stuff that has people, you know, kind of uncertain about what's going to happen next in the world. Bitcoin has been a safety spot, which is a strange thing, and I certainly did not predict that. I'm sure many other people will claim that they did, and maybe they did. But here's one thing that's pretty impressive about Bitcoin is that it's actually kind of behaving in a similar way to gold right now. Concerns around the U.S. national debt actually seem to be fueling both gold and Bitcoin higher, as they offer an alternative place to traditional stocks and bonds for investors to hide out. And I marked in here that pullbacks into support areas are possible buying opportunities in my personal view. All that to say, Bitcoin is impressive. Look at this move, right? Just a clean shot through those all-time highs, almost acting like it didn't even notice the resistance points that we can all clearly see on this chart. Bitcoin is a winner in 2025. And you might say, well, Nick, it had a big drop. Well, yes, but again, 31.5% down move on the price of Bitcoin. For the Bitcoin bros, that's nothing, right? Bitcoin bros are used to 90% drops. The Bitcoin, bounce back is arguably more impressive than the stock market. The stock market didn't do all that much better at a 21.5% drop. So Bitcoin on a relative basis has already round tripped the all-time highs. Meanwhile, the stock market is still, 5-6% off the all-time highs? 5.5%. So what I'm showing you is what we would call relative strength, because Bitcoin has already retested those highs and even broken out. Stocks are trying to get there, but still working on it. So what do we make of all that? What do we make of a Bitcoin chart moving like this? Well, this is telling you something. This is telling you that there is still large amounts of scrutiny in terms of US denominated stuff right now. What you're looking at right now on your screen is the 20-year Treasury bond ETF. Some of you guys may have noticed that there was some pretty big moves, specifically in the bond market and the stock market yesterday. And the dollar, right? I think the dollar also moved a good bit. A little bit less, but still dollar moved. The reason I bring this up is that we had a Treasury auction yesterday that went pretty poorly. Now, when I say poorly, what I'm talking about is if not a lot of people, or if the aggressiveness to buy national debt from the United States or to lend money essentially to the United States, if the auction is not going well, that's telling you that people are not stepping up to lend money to the US. Now, of course, there were many people there, but the prices that they wanted, the bid was not very strong. So the auction, right, naturally, if no one wants to buy something at an auction, what has to happen? Price of bonds has to go down. And so we're witnessing something pretty fascinating right now. The bond market is continuing to get pummeled today, even following the poor bond auction that occurred yesterday. Now, poor bond auction is a straight up bullish catalyst for gold. And so we've continued to see the gold market kind of drift higher on this. And I wouldn't be surprised if we do see gold head back up to test some levels of resistance off of this. But part of the reason for that is because, think about it, if people are very, very concerned about US national debt and they're unwilling to buy bonds from the United States, what does that signal to the markets? It signals that there's mistrust, there's considerable uncertainty in the largest money liquidity provider to the entire world, the United States, right? So gold in that environment typically drifts higher. There's some concerns about, whether or not bills will get passed in, the big beautiful bill from Donald Trump and all this stuff with the Republicans and Congress and all that, and all the drama on that front. It's making people concerned. The national debt is a massive, massive kind of, it's like something really, a big eyesore in your backyard. That's pretty much what the national debt is in markets. It's something we all know is there. And eventually we're going to have to figure out what we're going to do about all that. And unfortunately, for many, many years, the solution has been to put it onto the next guy, right? Solution has been to the next politicians will figure it out. The next generation will figure it out. But the problem is that only works as long as everything is solvent and everything is good. But the problem is if you get into an environment in which the people who buy debt from you or buy bonds from you, who are lending you money, say, no more, we're not lending money to you anymore. If that happens, that's a massive bullish catalyst for gold, probably the bullish catalyst for gold. You want to talk about the greatest, like what gets gold I cannot think of something that gets gold to a $5,000 price tag or $10,000 price tag faster than the US national debt getting defaulted on, something like that. I mean, I don't even know that people comprehend how fast gold could go to 5,000 if that were to occur. And there are crowds of people who have been saying this, and this is where you have to be careful, for literally decades. People have said, "Oh, Bitcoin, or I'm sorry, gold is going to rip to the heavens because the national debt is going to explode." And the tricky part with this is that you can say that and be right in the super long term. Maybe that does eventually happen, but what if it's 50 years from now, right? So that's where you have to be careful with that thinking. But it is something to know something about. Don't live under a rock when it comes to national debt. It is a massive, massive problem that has to get addressed. And according to Jerome Powell, it needs to get addressed sooner rather than later. Hope everybody's doing well, by the way. Just wanted to also mention that we are going to be doing something kind of cool here today. We're going to be giving away a VIP membership. I like doing giveaways. We'll be doing a VIP membership giveaway today. So what this unlocks for you is if you win the giveaway, you'll get access to every trade that I take, entries, exits, analysis, breakdowns, as well as you'll get access to our brand new trader on the team, Alan Perez. He is joining the team. He's a Forex trader primarily. So I trade primarily indices and commodities. I also trade FX as well. But Alan is an FX guy. So within the VIP membership, you're going to get access to his trades, my trades, and Ivan's trades, if you know Ivan. And we're doing a giveaway for the VIP membership. So here is the simple step to join the giveaway. You ready? Join the Telegram. So we'll drop the link here in the chat. If you are interested in joining for a chance to win, it is a lifetime membership, by the way. We're going to give it to somebody, and somebody's going to get it. You don't have to pay ever. You just get to join the VIP group, see the trades, join the chat room, become part of our community, speak with us on a regular basis. If you are interested in joining the giveaway, all you'll need to do is click this link and join our free Telegram channel and watch that Telegram channel. We are going to be posting updates on that, on how you can improve your chances to win. Simply follow the step number 1, join our Telegram channel. And you should join it even if you don't win. It's still great value because we are sharing charts each and every day, bonus clips. Like yesterday, I did a clip on gold, right? And then doing chart markups on fundamental analysis. I did a pound US dollar chart yesterday. We've been on fire with the Telegram channel. I posted this kind of update year by year of my trading journey. We took a look at some market breadth indicators yesterday, which were cool. So we're posting. If you're a chart fanatic like myself, come join our Telegram channel. It's completely free to join. And of course, as I mentioned, we are going to be doing a VIP membership giveaway. So today is extra time, definitely a good time to join the free Telegram channel. So again, step 1, if you want to join the VIP membership giveaway, it is completely free to join. Join the Telegram. Link is in the chat or in the description of this live stream. Any free backtesting tools? No, Hans. I've spoken with Forex Tester. Oh, we got news. Let me also just pull that up. All right. Let's take a look and see. Got unemployment claims. So let's see if it did anything. These have not been moving the whole market very much. Yeah, you can see 227 compared to 230. So nothing crazy on that front. Market's mostly unchanged. We had the market already kind of moving lower here this morning. As the 10 and 20 year yield continued to rise this morning. Bitcoin looking strong. Oil's down today. Dollar index pretty flat here recently, back and forth. Gold dropped, bounced back. Indices across the board had a big tumble yesterday. The bond auction went poorly. That was the concerning thing, is people are like, oh, national debt, don't want to buy US bonds, all that stuff. Anyways, what I was saying, I've worked with, the backtesting software, Forex tester, and I can tell you that stuff is not easy or cheap to build. But I'll tell you this, if you're looking to like get, there are many ways to learn stuff for free, but don't cheap out on software. I'm telling you, it is not worth the money you're going to spend on getting the right tools. And I know, obviously, take everything I say with a grain of salt because I run a software company that sells this stuff. So, but I'm telling you what, like genuinely, I mean it. The money that you're going to save by not spending money on stuff, you are going to lose tenfold in the markets due to lack of preparation. So if you are so serious about trading, this is kind of what is crazy to me. And let me just rant for just a second. In the trading space, ready? Like this might be my biggest pet peeve of the trading industry. And this is coming from somebody who I trade, right? I've reached profitability in my trading. It took an arm and a leg to get there. It was very, very hard to become a profitable trader. Like one of the hardest things I've ever done. So I am a profitable trader, and I run a business in the trading space, building and selling tools that help to automate the fundamental analysis component that many traders are missing. That's what I do. Now I'm telling you this is my vent to you guys for a second. We lose a lot of business, right? A lot of people say, I think I'm going to skip on the Edge Finder because they want to take their money and they want to buy prop firms. You know who else loses business to prop firms? A lot of companies. So Forex Tester and TradingView offer backtesting softwares, right? And this drives me, like, this is a huge pet peeve on multiple fronts for me. This is a pet peeve for me as a trader because people are so quick to throw their money at prop firms, but so hesitant to pay for any sort of education or tool that might actually help them learn something. Oh, brokers too. Yes. Lincoln says brokers too lose to prop firms in some ways. So this is a pet peeve for me because as a trader, I'm like, what are you doing? Right? People are so willing to throw their money, punting it into prop firms when they aren't profitable traders yet. But then it's like sacrilegious to ask them to consider paying for a product like Forex Tester, which I do not own, and I think everyone should own. It's an incredible backtesting software. I do have promo codes, by the way, for Forex Tester. I can find those and get those to you guys somehow. We share them in our Telegram channel, things like that. But point aside, this drives me crazy, and I don't benefit from selling you Forex Tester. I'm just telling you, like, obviously, I also think Edge Finder is in this category. I think if you are a fundamentalist, you should buy products that are actually going to level up your trading. Like, this drives me crazy because think about it, right? I can tell you firsthand experience, both as a trader and as a business owner in the software space, in the trading world. The money, the easy money, the massive amounts of money goes to prop firms. I don't run a prop firm. I don't have anything against prop firms. I'm not saying, oh, this is terrible, but this is what is wrong with retail trading in general. People rush to throw their money into live accounts in the form of prop firm challenges when they're not even ready for them. They're not ready for them. That's why prop firms, by the way, you know how I know this? Well, first of all, I do a lot of work with prop firms. I do a lot of work with software in the industry that's not my own. I also sell I have a lot of experience in this stuff. Prop firms make a lot of their money from people who are inadequately prepared to trade live money, throwing money into challenges. They know it, we know it, and yet people still do it anyways. So, again, the prop firms are just offering business. They're just doing business. I'm not saying they're evil for this. They're just administering a service that people want. But the sad reality of the trading space is people are wired so backwards And it's no wonder most people are just losing money in the markets. They're taking all their money and they're saying, oh, let me just get funded real quick. I got to get funded and then maybe I'll buy. You ready for the expression that kills me? I'm going to get funded. Once I get a payout, I'll pay for some backtesting software. I'll buy the Edge Finder. I'm like, you've got it completely backwards. Completely backwards. You don't learn how to play baseball by first getting into the World Series, right? You don't start at the finish line and then go back to the start of the race. That's not how that works. And yet in the trading space, that's why so many people lose so much money. Blunt, that's a great way of putting it. Unfortunately, people pay for the direct things, not the indirect ones. It's a matter of patience. It's a great way of putting it, right? Start a prop firm. This would be the most business logical thing that I could possibly do. But I personally don't really want to run a prop firm. I'm not passionate about that. And while I am certainly motivated by making money and making a strong business decision, that's not the only thing that matters to me, truthfully. Nick is such a salesman. I am a salesman. I'm never going to deny that I am a salesman, but I'm telling you the truth here. The fastest way that I'm not dumb. I know how much money I could probably make starting a prop firm, but I have no interest in doing that. It's not my passion. I don't really want to hand out money to people. I don't really want to, it's just not what I want to do. And that's okay to acknowledge. Like, I just don't, I prefer, you know what I prefer, what I am passionate about, building tools like this, creating education for free on YouTube, trading my own money and not handing out to other people. Like, why would I hand out all my money to a bunch of random people on the internet? I'm not interested in that. Again, I'm nothing against prop firms. I'm not saying all of them are evil. Some of them are excellent opportunities for traders who are ready for them. The problem is, again, everybody wants to get funded and nobody wants to take a year on a demo account. Nobody wants to take a course seriously for a whole year and learn their stuff. That's the problem with the trading industry. Everybody wants to jump to the finish line without putting in the work. So yes, is it a sales pitch? Absolutely. I'm telling you, Edge Finder, Forex Tester, TradingView Premium, a course from somebody that you really like that is offering it. We offer a free course, by the way. If you want to explore our free course, join our Telegram channel. We drop the link in there periodically. We'll drop the link to the Telegram channel in the live stream chat right now. Again, we offer a lot of stuff for free. We do also offer some paid stuff. But what I'm getting at and what I'm so bothered by in the trading space is we have customers all the time who are considering the Edge Finder, but something that's holding them back is they want to get funded first and receive a payout. And I cringe up and down when I hear that, because I'm like, you are absolutely making a mistake, but it just sounds like a sales pitch when I tell you that. Because you're like, if I tell you you're making a mistake, you should probably consider purchasing tools or education before trying to get funded and make sure that you actually have profitable results. It sounds like it's coming from, it sounds like I'm giving you just a straight sales pitch. You should buy my stuff, not the prop firm. You should get funded. I am a believer. You should get funded or grow a small account. You should do all those things, but you are not going to be able to consistently do those things if you are skipping the steps to get there. Which, does that mean you have to pay for a bunch of stuff? No. Grab a free course. Do a demo account for a year. I'm not saying you have to buy our products. I'm just telling you that most traders, they dedicate all of their investment into education. They throw that into prop firms and just churn money and then blow it up. Right? I don't know. Does that make sense? Give me a yes in the chat or a 1 in the chat if what I just ranted about makes sense. Like, I think we can probably all agree or have firsthand experience. Shoveling money into prop firms is a really stupid decision that a lot of traders make. Nothing wrong with prop firms. I'm not against them. Now, there are scammy ones that you need to be careful about. We all know that too. The problem, though, is not the prop firm. It's that people, the sales pitch of prop firm is so strong that drags people in. They throw a bunch of money at them before they're ready to get funded. That's the problem. People abuse them. It's like leverage. People abuse leverage, right? Prop firm's the same thing. Indices slightly in the red here today. Look at the Russell. I also want to buy the Russell. It's getting close to a level that I've been watching. 2000 might be an area I like. We had some really good inflation numbers here recently. Nick, you've been in the game for so long. You're an inspiration. Tyrell, I don't know if you're calling me old yet. I'm just kidding. I appreciate it. And thank you guys for the yeses, the ones and yeses. I appreciate it. I mean, I'm very, I just have to be like careful how I say that because I know it sounds like a sales pitch because I'm like, oh, I sell the Edge Finder. You shouldn't buy prop firms. You should buy the Edge Finder. And I will never dispute you should buy the Edge Finder. It's worth every penny. But you don't have to. But do me a favor. Well, do yourself a favor. Don't do it for me. I don't care if you do it for me. Do yourself a favor. Do not touch prop firms if you are not consistently profitable. Like, I actually think I'm going to go stand on the side of this building that I'm in and bang my head against the wall over and over and over with that statement because I've said it so many times and it doesn't matter. Like, people still make that mistake. You think you're ready for prop firms. 9 people out of 10 people are not ready for prop firms, if not more. Prop firms are difficult. They are not easy to make money with. Nick is 30 and still looks like he goes to college. Hey, what do you guys think about the, can we get a full camera view for a second? Check out the shirt today, guys. Let me see. Hold on. The shirt. It's got lizards on it. You kidding me? And there's like a light green lizard, and then there's like a navy blue lizard. And then there's like you can kind of barely see it, but it's like the white camouflage lizards that are like blending into the shirt. I don't know. I put on this shirt today. I said, wow. Wow. If only my trades were as going as well as my shirt selection. You're an absolute menace, Nick. I am flexing my fit today. I'm pretty proud of I'm not kidding. I'm pretty proud of the lizard shirt. It's pretty awesome. Gold down about 0.25% here this morning. Silver's down 1.2. I was really hoping oil would give me that breakout I was looking for. Still working off some of this. We're still in consolidation for oil prices. Would love to see this thing give us a break. Break to the upside, pull back. I like it. Where's the A1 trading shirts at? We actually have some pretty nice ones. They were not cheap. I have them. It's in the laundry somewhere, but I will usually wear it like once a week. Is Nick 20? How old do you guys think I am? I'm just curious. Dollar index 99.8, just under 100. Dollar's also kind of in consolidation. I've been talking about gold and the dollar, how I'm pretty neutral on both at this time. I like the indices. I did take a long position on the Dow on the 4-hour chart. My first attempt on the long side, not going super well just yet. We'll see if it turns around, if we can get a little bit of a continuation move here. Alternatively, if I stop out, I'm going to watch to see what happens. So I have a Dow Jones long position. If this holds this area and we start to rally back, I'll look to trail a stop if we can take out these previous highs. And if we fail to hold this area and the gap open area, right? So this is the gap window, right? Gapped up for the week, found support quickly and rallied. if we come back into that area, which we are in right now, and we decisively fail at that area, that's a signal to me, okay, that your area, your zone of support here is just not holding, and we need to close the trade. So I am long Dow. I think we have a good shot of continuing the move. And if I'm wrong, I'll take a loss and look for a possible re-entry if we can get down into one other level I've been watching is this one here. So I do not mind at all if I get stopped out. It is just trade attempt number 1. I'd be potentially interested in trying again a second and a third time if we can get a deeper retracement on this on the daily chart. Okay, guys. Coming up next, we've got our next show segment where I will be joined by Miko and Marco to take a look at some technical setups. We call these this Technical Thursdays for a reason. We're going to get into some chart ideas and things that we are all three are watching. Stay tuned. We'll be right back with Miko and Marco after this.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, we're back with Miko and Marco. How you guys doing?
What's up?
Nope.
Good to have you guys back on the show. We do this every Thursday. Take a look at some charts together. Just talk about what we are seeing, what is kind of shaping up. Last couple months have been really crazy. We've cooled off a little bit. Things are not so volatile as they were. You know, we can see that kind of evidenced in the VIX. Take a look at the giant spike in volatility that we had across the board back in April. We've now since really cooled off for the most part. But where we typically start with these shows is we each give a little bit of a chart of the day, something that we're watching. So, Marco, why don't you start us off? What's top of mind for you today?
Sure. So for me, it's gonna be NJ, but you also didn't answer. So how old are you?
Oh, yeah. No, I'm 48.
We had a bet going on. 48?
No, I'm just kidding. I'm 28. 28 years old.
28.
Yeah.
Okay, cool. I thought you were 45. So
I get that sometimes. I also get younger, so I don't even know what to think. That's what it's always an interesting. How old do you guys think Marco is in the chat? Give us, and then Miko after that. We'll do Marco first.
Yeah, sure.
This is not gonna end well.
So for me, it's NJ as the chart of the day. There is just so much going on, and it looks very clean right now. I know that the macroeconomic picture is risk on, which is good for NJ. I know that the Edge Finder is very bullish. I know that the daily chart doesn't look that good anymore, but it looks still okay. So when I zoom in on the 1 hour chart, I'm actually looking for a short-term buy entry here. I'm also seeing a small descending channel, which is a bullish pattern. So if we can get a signature of momentum, I would be pretty happy to get in on a buy setup after an impulse up and then a flag formation. So NJ, or New Zealand dollar, is very bullish in terms of economic numbers, and the Japanese yen is kind of bearish. So just waiting for the fundamentals to start playing into this daily chart and possibly get us maybe to these highs. To be honest, I would like to see us get up to these highs as well. So I'm looking for a short-term buy setup, possibly even a longer-term setup, aiming for these two levels. So that's my chart of the day, and that is what looks the best. Bitcoin as well, but I think we can do that a bit later.
Yeah, for sure. Miko, same to you. And actually, Marco, before we move on, give us, how old are you?
26.
All right. Youngest so far. We'll see what Miko has to say in a second. Guys, guess how old Miko is, and maybe we'll ask him to tell us in just a few minutes. Miko, what's chart of the day for you?
So yeah, Similar to Marco, Aussie yen I like to the upside. It is crept into a nice level of support, and I'm kind of looking at a inverse head and shoulder pattern. So this is the daily time frame, really nice support not long ago, potentially could act as support again. And of course, this would be the pattern left head and the right shoulder, and that would be the neckline of the pattern. So essentially just looking for a higher low for the continuation. Potentially, I'm not too sure about a reversal, but potentially maybe a bigger retracement. The market may still go down. This is technically our last major high, so we could even do that. But at least for the time being, I'm looking at some buys. The yen has been quite strong as of late, but hasn't done anything significant for me to change that bias. So I'm looking for entries at the moment. I like how slow we are, quite corrective, implying that we possibly won't break through this level. As you can see some strong bullish momentum enter the market, then yeah, I'll be looking for some entries and targets back to the high there. So the risk reward looks pretty good. Looking to enter the 4-hour chart and potentially further as well. But that's the chart which I'm focusing on today.
Very, very interesting stuff. I'll try and pick one for mine that is in tandem with the Forex theme here this morning. So to both of you guys' credit, taking a look at the yen pairs. So I went long NZD/JPY. I'm still long, but I use a dollar cost averaging or a scale in, scale out. I don't know the proper terminology for this. I had somebody who heavily disputed with me the concept of DCA, dollar cost averaging, because I guess when you get really technical, the concept of dollar cost averaging is like a buy and hold forever, but buy in pieces kind of approach. But that's not what I do. So I guess maybe the more proper way of defining it would be like a scaling in strategy. So instead of going all in, on the NZD/JPY here, I've instead taken a very small position here with willingness to potentially add here and maybe even add somewhere lower, as long as the overall fundamental direction, if I can get that right, I'll still do okay. It is not for everyone, and is actually, so I haven't really spoken too heavily about my dollar cost averaging style on YouTube. And now that I have started to do a little bit of that, I realize how controversial it is. People who are like super anti adding to losers and all that sort of thing, which understandably, if done without or irresponsibly or inappropriately, dollar cost averaging or scaling in or adding to losers can be a huge no-no if you have like giant risk size or but the way I think about it is I'm not necessarily adding to a loser per se. I mean, I am in technical fashion doing that, but instead I'm saying I generally like NZD/JPY between this area and this area. I'm saying I'm not so focused on getting the pinpoint perfect entry. I just know I want to accumulate long positions, and I like it more at the bottom of that range from a bigger term picture than I do at the top of that range. For me, with currencies, I find timing to be very tricky. And so instead of focusing so much on timing, I just focus a little bit more on direction by scaling in with very small size. So I just wanted to say that because I've had a lot of people asking me questions, Nick, about how I've been, essentially moving this. So for example, let me show you, I'm going to make my chart of the day, my worst performing dollar cost averaging currency pair, which is the Canadian dollar against the Swiss franc. So I have a long position from over here, and I believe I have a long position from over here that I've just been sitting in. And they're not, it's not a massive drawdown for me, but it's been a trade where I'm just sitting on the sidelines. Part of the reason for this is on a bigger picture, longer term fundamental view. I have two reasons for this. Number one, trade deals, if they happen, should help the price of oil, which would help the Canadian dollar. And then the other reason is because, and not to get too technical on the fundamental side, if I go to my economic surprise meter, the Canadian dollar has actually been a decently strong outperformer in recent time. We also saw the Canadian inflation report come in higher than anticipated. So I like the Canadian dollar as a bit of a counter trend opportunity here that I'm scaling into. with very small size. So I just wanted to make that my chart of the day. I know it's always easier to talk about a winning trade or something that's more exciting, but sometimes chart of the days can be something that's not going so well, or something that you're going through in terms of a drawdown. So I'm in drawdown on some currency crosses that I'm watching on the yen pair and yen pairs that I've been trading, and CAD Swiss. Maybe we can jump ahead. Marco, well, actually, before we do that, Miko, what's your age?
25.
Okay, so Miko's the youngest. All right. Okay, so Marco, you mentioned it earlier. Bitcoin's breaking out 111,000 and just narrowly missed 112. We might see it by the end of this stream. Marco, what are your thoughts here? Is this something that would you place trades, buy and hold? What are your thoughts on Bitcoin today?
Yeah, I'm actively watching my ledger. So that's nice that the long-term investments are going up. But something that is not really that great is I never got a pullback to this area. So I was looking for like a short-term buy setup. We never got that. Now my area has moved up a bit. I'm looking at this support level. So I want to get in. I want to see a pullback. But this looks very impulsive. We just broke the all-time high. Bitcoin is known to really break out with massive force and never give you a pullback. So the game plan is wait for the pullback. If we go to this area and I get a nice buy setup, I'll be interested in that. Stop loss will probably go a little bit below this support level. If we go up even more, well, then I'll need to find another support area, possibly a bit higher, and aim for the same thing. But I don't really see this pulling back a lot. And if it does pull back a lot, I'm a little bit afraid that we're just gonna massively sell off, with how Bitcoin goes. But I have my levels set, so looking for buy setups. I'm just gonna follow the plan.
Fair enough. Yeah, no, I like that analysis quite a bit. A pullback to that 102 level that you've got marked up, I think, is probably where I would need to see price pull back to as well to establish any sort of long position. But yeah, I mean, you hit on the head earlier about the risk on sentiment that seems to be kind of formulating. I know another chart that we like to periodically, I know we do a lot of like sentiment, relative strength, things like that on our calls here together. Bitcoin to gold ratio still looks really, really good, right? Bitcoin outperforming gold, showing the directional bias here, still seems to be a little bit more poised towards risk on, clearly making a strong push here today. Miko, what are your thoughts on Bitcoin, risk assets, just in general about what we're seeing?
Yeah, so it's looking good so far. I think the key thing is just seeing more momentum with Bitcoin, because we are trading at all-time highs, so things are looking very bullish. But if we slow down, become a bit corrective, that's a bit of a red flag for Bitcoin, and that could invite potentially a bit of a sell-off. So I want to see price kind of give us similar breakouts as we've seen with the past, like we had over there. Here we didn't really see much. Price consolidated and then price had the breakout, especially the last big bull run. I would say pullbacks have become a bit more frequent now as well, which I don't know, might be a sign of us slowing down as a whole, not seeing Bitcoin as exponential as it's been in the past. But in terms of the price action, I would just be focused on longs here. Trajectory, difficult to say how far we can go, but I'm not seeing any red flags just yet, so my impression would be more upside. So from a trading standpoint, I think pullbacks make the most sense. We had a lovely consolidation here. Unfortunately, no retest. Another one over here, which potentially might provide a retest as well. It just depends what type of price action we see with Bitcoin. If momentum's just going to keep pushing, it might only be a situation where you have to scale right down to find an entry. Maybe something like this could form, but in terms of direction and my bias, it's still very bullish.
Yeah, I mean, the directional bias here, or at least in terms of price action, is just clearly up. I mean, it's just been so impressively strong this year. I think part of the reason just might be the alternative to U.S. Investment. I thought about this morning when I was driving into work. I thought about, if you have a situation in the next coming years where people want to offload a little bit from US denominated stuff, US stocks, US bonds, US everything, where would all that money go? If you had, I mean, that is a ton of money, and it's global money, right? That's like foreign investors make up a huge component to investment in the United States and Silicon Valley and all the Mag 7s. Like, it's a huge portion of it is money from outside the United States invested in it. And I think it's so interesting because if you really start to think about, even on a local level, if you said, I no longer want to be as heavy, you don't even necessarily have to sell all your US stuff. But let's just say you're like, I just don't want to be as heavy exposed to the US. If that theme takes place over the next few years, where does that money go? It goes to everything except US stuff. That includes Bitcoin, gold, other currencies, other stock markets, altcoins. Like in some capacity, everything else gets a little bit of a bid if you do kind of lose that US superior investment class status stuff. So I just thought that was an interesting thought. I think that's part of the reason why Bitcoin has already taken back those highs, despite, US stocks bouncing back nicely. I mean, really nicely. They're still off their all-time highs. And Bitcoin had a similar comparable drawdown to the NASDAQ and is yet past those all-time highs. It's really remarkably impressive how good Bitcoin is doing. And I think that's something for us to just keep an eye on. This is many years. You can dispute if you like Bitcoin or not, but you can't dispute that it has massively outperformed pretty much everything else in the last decade and a half, whatever it's been. So just something to think about. Let's talk about metals here for just a second. Marco, what are your thoughts on gold, silver? I know a little bit of a while ago, we were both kind of bullish on gold at the same time. I've since kind of gone back into neutral camp. What about yourself? What do you think about gold?
Yeah, so for gold, I don't have it on my active watch list. The reason is I do believe we are still risk on. And if I'm looking for buy setups on things such as Bitcoin, the NASDAQ, and let's say the German stock market, I don't think gold is going to be the greatest play to go long at the same time. So currently I'm risk on. If something happens, some sort of an issue, new tariffs, new problems with tariffs, then gold could be flying higher. I know it's catching a bid right here in the last few days, so it's looking pretty healthy. I just cannot justify going long right here because of the overall macroeconomic situation. Mm-hmm. So I'm waiting for a catalyst. Until I get a catalyst, I'll just be patient, sit on my hands. That's the general plan. Technically, it looks okay. I'm not gonna lie. Technically, it looks good, but I don't want to own it right now.
Yeah, that's exactly how I feel too. I feel like the technicals long-term uptrend looks very, very intact. I'm curious what you think, Miko. You're the what am I thinking? Technical purist of the group here. No, nothing but technicals, which I respect. I love it because it's a lot the charts can tell you. And before you even answer, one thing to think about too is a lot of the stuff that some fundamental analysts might gather can also be determined from the technicals. I'll give you a quick example. Bitcoin's outperformance to the NASDAQ, while that is not necessarily saying fundamentally why, you're getting the same kind of idea by saying relative strength is like a mix. It's a combination of technicals and fundamentals, because you have to ask, there is a reason for that outperformance, but maybe a technical purist doesn't really need to know or care about the reason. So I think that there's many seats at the table, many ways to approach the market. So on gold, right, where we had this dominant upward one direction move, we've now gone into a bit of consolidation. You've got your 4-hour chart pulled up. What do you think about how it's been performing here recently?
So yeah, I'm still as a whole very bullish on gold. Trend, no signs of necessarily reversal. Yes, things have slowed down over the past few days, and I think it just probably might be a healthy part of gold's trend if it is going to continue. That is, I have kind of drawn up this, if I drop to the 4-hour chart, I have drawn up this channel here, which has made things a little bit interesting, potentially a big bull flag at play. So that's our recent impulse. There's our first correction, second one. And if we are going to see some follow through, we should be looking at potentially breaking the high of that channel. So this is where things get interesting, because if gold is going to become flat and potentially retrace further, then this is kind of the area which I expect us to potentially put another lower high in and start making our way back to the lows. We did a good job at respecting this area here and the low of the channel a couple weeks back, I think, or last week. Nice push to the upside, but it hasn't really set the market alight. It's not like we've seen momentum like we've seen before. It is a little bit slower, so I do worry at this top here. But for me, from a technical standpoint, that's make or break, because if I do see a powerful break above that, well, I would be pretty bullish and expecting gold to make its way back to highs. If we stay slow corrective, a lower high here has a good chance of forming, and we might see a swing down, which again doesn't necessarily mean gold is bearish. It might just be another test of support before we do push through. In terms of really going bearish for gold, I really want to see momentum through this level, maybe even start to attack some of these lows. That's when I will truly be bearish on gold from a technical standpoint. But I like the buys down here. But yeah, more importantly, just see what price does at this 33.25 level. Yeah, but if we do see a break, I don't see any reason why we can't push back to highs.
Very nice. Yeah, no, it's consolidation to say the least. Whether you're looking at the 4-hour chart or lower, it's been kind of choppy here recently, but we'll see if it can get a little bit more of a decisive break. I would agree, if you start to see a break of those lows or of those highs, likely it's accompanied with a catalyst, right? Like most likely there's something that would get gold to make a significant move beyond the all-time highs, or start to break that 3140 level, that range, that, or 3150 level that you've got marked on your chart. So yeah, we'll see if gold starts to make a decision one way or the other in coming days. While we're on the subject of gold, let's talk about the dollar as well, which of course plays a big role. Miko, you've got the chart already. What about DXY? What do you think about that one?
So DXY, I was looking for a bit of a bounce this week for the dollar. Didn't really see that happen at all, to be honest. I was looking to see if price can bounce here, potentially another higher low and climb high, because I do think there is still more downside for USD longer term. My plan, since we've had this big drop and cleared the lows, has been basically a pullback of that bearish leg and then more downside. But potentially maybe the bears are stronger than I thought, and potentially looking to continue price sooner. And if that's the case, well, I would expect us to push back into this low around 98. So things are looking pretty bearish, I have to say, for the dollar. The fact that we cracked that support pretty easily this week says a lot to me, and my expectation for the next few days would be something like this, potentially continuing with those lower highs. I did have a bit of a bullish bias come into the week, but I'm not really seeing much signs of that continuing. So with this break of structure, if we can come back, retest that hold as resistance, I don't see why we can't continue to sell off and potentially just continue that bearish pressure we've seen all year, and that could take us back to low. So I would be pretty bearish now on the dollar.
And Mika, do you like the pound dollar as much as I do to the upside?
If it does break resistance, yeah.
Yeah, it's sitting right there.
Yeah.
It's like right there, and the strength of that chart is just remarkable, really.
Very, very bullish. Very, very bullish. If it can do its job through that high, then we could look at very nice buys after that.
Yep. I think we see the same thing on that one. Marco, what about yourself? Any dollar crosses, DXY, whatever you'd like to look at? What has your attention on the US dollar side of things?
Sure. But first, I also want to mention silver, which I do have an alert set here on the highs, and I wouldn't mind getting in on buy setups, even if we don't have like a risk of catalyst. So if we do break out from these highs and then print a buy entry, I'll be pretty happy to get in, because I do think silver has a lot of catching up to do to gold. So this would be more of a technical play, but I do see a lot of potential if we can just break out from this level on silver. So now for the DXY, let me go to the DXY. Yeah, I do think we are still bearish. I think we're printing a lot of selling pressure. We had these massive two legs on the daily chart, and now we are sort of continuing with that. when I take a look at, let's say, the euro dollar and the pound dollar, they're looking still very bullish on the daily chart, respecting this 20 EMA. So I totally agree with Miko. I think this is looking pretty bearish. We are now also at a key level of support. So if we do break lower from this, then we could get a massive slide lower as well, like this. So bearish on the DXY.
Fair enough. And if you had to trade it against a currency, what are you thinking? Euro dollar, pound dollar, Aussie dollar? What looks interesting?
Because of the edge finder, it would have to be the pound dollar,
Mm-hmm.
because the pound is so strong as a currency right now. We're getting a really bullish reading for the pound, so it would definitely be this. But as you guys mentioned, if we can just break out from this level of resistance, get a nice bullish impulse, I think that's a really good play for buy setups. So pound dollar, pretty much same as you guys. I think we're on the same page on that.
Yeah, and just to throw in just a dash of spice or fundamentals, check this out. On the UK economic heat map, we've got something pretty fascinating happening here. Rarely do you get a impact score that is so high in favor of a currency. And that's why I think there's a good chance, never a certainty, but a good chance that we do break those highs and that we keep going. Because what we see right now is almost all of our metrics on the Edge Finder tracking the UK economy have been bullish for the currency. So, for example, we just had CPI come out for the UK. It came in higher than expected. That is hawkish because it basically pressures the central bank to not cut interest rates. They're trying to cut rates, but this keeps them from cutting rates because if inflation's already high, they don't want to cut rates into that. So that's bullish for the currency. Retail sales beat expectations. They were expected to be negative, and the consumer came out and spent money. Could that be because of tariffs? Maybe. That's the criticism there. PMIs, however, right, came in better than expected. GDP growth was positive when it was expected to be 0. So a lot of these forces here that we pay attention to close on this channel are confirming the technicals, right? The technicals look great. The fundamentals also look great. Unemployment rate 4.5%. Not, that's not it's not too high at all. PPI also came in. This is a little bit delayed since it's going back from February, but also higher than expected. So we're just getting a whole lot of listed reasons for why the UK economy is relative to expectations, which is what this impact chart shows us, beating expectations, which again is strong for the currency. So yeah, when I look at the pound dollar, this has got to be my chart of the day in terms of US dollar crosses. I'm very interested if you get this kind of move in looking for long side continuations, and I would not be surprised whatsoever if when we pull out the weekly chart, if we are in the process of heading back towards maybe that July, May high that we saw in the pound dollar exchange rate, which is, all the way up to like 1.4, which again, may take some time to get there, but I think technicals and fundamentals both kind of line up here. Just going to be dependent on what we all had marked up on our chart, that major level of resistance going back from September of last year. So really interesting stuff. Miko, Marco, thank you guys both for spending some time with me here today, going through a lot of charts. We did a lot today. For everybody who's listening, we've dropped the link and their YouTube channel link in the chat right now. You can subscribe to Marco and Miko on their respective YouTube channels. Please do that. If you enjoyed their commentary, it's a great way to help out the contributors to the A1 Trading Show. This is a collaborative team effort to put on these kinds of shows, and they take time each week to come on and share some ideas and things that they're watching. There's a ton of free value they have on their own YouTube channels. I encourage everybody watching to make sure to go subscribe. You can find them on YouTube. Marco's Trading Journey and Miko Audu on YouTube. Guys, thank you very much for coming on today.
Cheers.
Thank you. See you.
See you guys.
See ya.
Bye.
Good stuff, as always, with Miko, Marco. And again, I do, as always, ask everyone to go support our guests. If you are a supporter of this show, by supporting our guests, you're supporting our efforts to bring on notable talent in the trading space. because they see growth in their own channels from coming on the show, they keep coming back. It's a simple, everyone wins. It's a win for the audience. It's a win for the A1 Trading Show. It's a win for the contributors to the A1 Trading Show. So we do ask that you support our guests, anyone that comes on, that you enjoy their commentary. Of course, you can still find them here once a week, but if you want more from them, go check them out. Dollar index flat on the day. Gold flat on the day. Oil was kind of a big mover in the pre-market here, down to 61.13. NASDAQ slightly positive. And yeah. Okay, so looks like we're going to end the stream a little early today. But before I do that, let me just pre-announce something. So I said this earlier. We're going to be doing a free to join giveaway in our Telegram channel. We're going to be giving away a lifetime VIP membership with us. You can join our coaching calls with this membership. You can see every trade that I take sent directly to your phone, as well as Alan Perez's trades, who comes on the show, as well as Ivan, who is also a regular show contributor. We share our trades inside of our premium version VIP group. It is free to join the giveaway. All you need to do in order to enter is join our Telegram channel. And shortly after this stream ends, I will be posting the link to improve your chances of winning. Enter into that giveaway link. So I'm going to be sharing that in our Telegram channel only. So step one, if you want a chance to win, why not throw your name in and join an amazing free Telegram channel where we're sharing charts every day. If you'd like to join the giveaway, like I said, click the link, just been dropped in the chat. And I'll share that link for everyone in just a moment after the stream ends. Thank you guys for tuning in. Appreciate you. And we will see you on the next one. Bye, guys.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.